In the metals quadrant, the April gold futures contract is now down 5 straight sessions and is having its worst single-day loss on a percentage basis since January 3rd. The interesting thing about that January 3rd day is gold was coming off from a retest of the move higher on December 4th. So we had a record high close on December 27th, and then 3 days later, we had that day that was down over 1.5%. Today is almost as bad of a move down as that day was. Well, it was a pretty good day earlier. The high was actually 2047 and 30 cents. That was up 0.7%. But then we got that move lower to 2002.80, down 1.5%. We ended up finishing closer to the lows than to the highs, down a little bit more than 1.33%. CPI was the main reason for that reversal. CPI came in much hotter than expected, taking rate cut chances to a recent low, with markets now eliminating March as the highest probability of the first rate cut in 2024. That matters because potential rate cuts in 2024 is what had been driving gold higher in the first place. Year-over-year headline inflation came in at up 3.1%, lower than last month, but hotter than expected. And the year-over-year core came in even with last month at plus 3.9%, and that was plus 0.2% higher than expectations. Maybe more importantly, both the month-over-month headline and core came in stronger than expected and stronger than last month's figure, which means that it's driving higher on a short-term basis as well. Rates jumped, the largest jump in the 10-year since February 5th, and it's at its highest absolute level for the 10-year and the 2-year since November 11th. But again, more importantly, the 20 basis point jump in the 2-year yield, which correlates much more closely to the Fed funds rate, is the largest since March 16th, up 20 basis points. That's March 16th, obviously, of last year. So the 2-year up 20 basis points, 5-year up 18, 10-year up 14, and 30-year up 9, with the 2s, 10s inversion going in the wrong direction, is a big headwind for precious metals.